Hey everybody, welcome back to Liberator Trading. It's been a minute. You know, it's not a full-time gig making the YouTube videos. I just do it randomly when I'm interested in talking about things. But I'm just gonna kind of go over some of the stuff that I look at throughout the week. Maybe it can help you guys get some ideas on how you can more effectively trade. I'm not an amazing trader. I've only been doing it for about a year. Um, I'm still learning, slightly profitable, not amazing or anything like that. But I wanted to talk about the expected move first, which is what I use. I use an implied volatility range, which comes from the options chain, um, and using implied volatility as an advantage to figure out where the market could potentially go. It is outside of an expected move, but it gives me more of a view into where we could possibly go using volatility, which is something that you should be regularly looking at as a trader, just in general, so you have an understanding of what's going on with the market. So this week, let me zoom in here. As you can see, this week this is where we closed last week. So there's our implied volatility. This is all auto calculated. May not be the prettiest setup, but I'm not looking for pretty charts. I just want something that looks is helpful. But we came up into the implied volatility zone. This is a 70%, and that's 100% of that zone. And um, anytime we cross over the 70%, I'm like, okay, well, let's see what's going to happen here. Are we going to reverse? What's going to go on? Just because it's outside of the standard deviation of where we could finish. So we got up here and then we precipitously fell back down, came down into here, which you could say was a previous low if you want to look at the technicals. Came back down and we're pretty much unchanged. Like we finished at 67.28 last week and we finished at 67.33 this week. So that's one thing that I'm always watching, that I always have on my screen. I also have a daily as well. We can zoom into there. Not as helpful as the weekly implied volatility, but at least gives you an idea of where we're at in the market. If something's going on, you're like, okay, why did we just reverse there? We're in the middle of the expected move, volatility range. As you can see, last week, um, last on Monday, we got outside of it, and then we moved into the edge of the implied volatility move. Then we came back down, and this day was just an absolute sell-off. But once again, we were outside of the week. We were inside of that weekly implied volatility zone. But you can see, I mean, comes back up. Maybe it didn't happen that day, but it came back up, came back that day, came back that day. We got overextended, potentially, you could call it that. And then we came back in. And then today, we got closed we opened way low and then we filled the gap moving into it. And then we sold off a little bit into the end of the day. So that's just two spots that I look at. I look at those because it just gives me an idea of where we could potentially go and where we could potentially reverse from. Let's see. Another thing that I recently learned is this McClellan VIX. I actually learned it from the Schwab coaching that they have on YouTube from an old video that I found. So I look at this periodically. The son of Tom McClellan, came up with the Bollinger Band to SPX or S&P 500, looking at slopes on the upper Bollinger Band to how the VIX is moving. And we'll come and draw in some lines down here. As you can see here, when the upper slope when the upper Bollinger Band starts to move and slope in up or down, it's an indication that the SPX could potentially be moving in the opposite direction. So as you can see, we've had a slight slope, and then the slope dramatically started to increase here on, let's see, 3.5, and then 3.5, you kind of have this move down in in the SPY, in the S&P 500. I'm just going to make that a little bit bigger. We have that move there, and then here on 4-4, so 4-4, 4-3, I guess, but we didn't really get the curve up. It happened there. Um, if you come back here, you can see that the S&P did indeed from 4-4 go down, and then it kind of got a little crazy there for a little bit. And then we started the volatility. I mean, that happened back in April. But then here, you get the slope started to move down dramatically from about 616 down to 617. So if we just come over to 616, you can see about 77. Yeah, we pulled back, but then the S&P started to come up here, and then here we had an indication that maybe something's going to happen. Slight slope down from, if you zoom in, some of these are a little bit more dramatic. I'm way zoomed out because we had this huge move, but there the slope was fairly shallow, and then it picked up right here on 825. Oh, didn't mean to do that. Anyways, that's about that bar, I think, to like there-ish. Yeah. I just removed it again. Oh well. Sorry. And then here, what is this? 825, 825's about right there. You had the S&P going up at the same time, but this could have been an indication that maybe something was going to break eventually. The S&P is going up. This is sloping down. Sorry, I said that backwards. This is sloping down. And you can see here on this one that we did, in fact, start to go up. We had this drop off, go back up. Then here is where this all happened. And it's just been kind of weird. It's been a weird, not as correlated here, but it's been oddly strange that starting maybe about there, um, we weren't moving as you would have thought with this increase. I mean, I guess you could say we came down slightly, but not incredibly. But here we kind of have the slope. It's starting to move up, and as you can see, we're outside of those Bollinger Bands. So there could be some sort of expansion. So you could see it as a leading, a correlation, or it could be a guide as to what is to come. It's kind of cool, just the idea of it. Obviously, you have to zoom in when this VIX is way down here. So I use that just as an idea to give me some indication of what could potentially be happening. Only use the upper Bollinger Band. You don't need to use the lower Bollinger Band. And then another things that I do is I come in here and I have moving averages that I look at. So here is just go look at SPX. Let me remove these drawings. So I was just showing you. I've got the 5-period day and then the 20-day simple moving averages. As you can see, since we crossed back here, it's been an absolute uptrend. I think we slightly crossed under there, just barely, but it wasn't enough to give any indication. But here, we might start seeing the 5-period moving under, which could just mean that we're moving into consolidation zone as well. Then I have the 10 and the 50, just gives me a different ranges of moving averages. I have a 4, 9, 8, and 18 moving average cloud that I have. Obviously, we haven't had any red, but they haven't been completely stacked. And then I have some moving average envelopes. This is a daily moving average envelope, so it's just a 3%. Typically, if you get outside of that 3% range with the 21 moving average, there's tends to be a reversal at one point if it gets overextended tend to return and touch the middle of that line. As you can see, it does happen. If we come up here to the upper edge, we'll come back and fade. We got overextended here, and then we did come back and touch, came outside, got back in it, hit the upper edge. Down here, same thing as you're going in reverse. This is a weekly, 10 period weekly moving average with a 5% envelope. You can see we've been hugging up above that 10 period moving weekly average. Then I have Bollinger Bands that I just like to look at just because it gives you an idea of what volatility is, and standard deviations of how the average true range is changing. As you can see, we got outside of the Bollinger Band, they expanded, and then we fell back down, and then we came up, and now we're touching that bottom one again. So that's a daily 20 period Bollinger Band, and then I have weekly Bollinger Bands as well. As you can see, this year with the weekly Bollinger Band, there's been quite the expansion in volatility in the standard deviation, but we've been hugging the upper Bollinger Band. Then I just have some weekly moving averages, a 13 and a 40. So we crossed under it, then we crossed above it, and we've been holding above it ever since. Then I have some oscillators that I like to look at. This is just a momentum oscillator. I've used this one before in the past on X and just in other videos. As you can see, momentum long term for the 10 period moving momentum and the 40 period moving momentum for the close. As we've run up here, it has shown weakness, and it has shown that we actually haven't been making new highs here. That's typical with momentum, just when we get this extended moves like this. But just be careful when these start to cross under the zero, below zero. Then I have moving average divergences. So this is just the distance between the two. This is a 918 and this is a 1050 because I use those. As you can see, the 10 and the 50 have been above each other, but the 9 and the 18 have recently crossed under each other and been in a negative. Then I use a CCI just to give us an idea of overextended. So we could actually be potentially overextended here to the downside. We were here up at the top after we rallied after the big move here on October 10th. And then I have an RSI and this full stochastics as well. As you can see, we've got the RSI divergence has been happening. Stochastic actually wasn't, but the stochastics, we do have lower lows, lower highs, but we have higher lows. So there could be some contraction coming into the, there could be contraction that we're seeing, which always leads to expansion. As you can see with the SPX, we kind of are starting to maybe potentially contract a little bit up here at the top. And RSI is pulled back into pullback zone for a bullish market. We're above 40 still, so you could keep that. And then I have the Williams percent R, which is just basically an upside down stochastic, but it's the same idea. Oversold, it just reacts a little bit quicker than a stochastic. And then we've got the MACD, which has been above zero, but we've had crosses in there, and it's been slowly, they've been slowly converging into each other and losing that momentum. And then I use price channels as well. So let's look at those. As you can see, we made a new high with a 20 moving period, 20 period price channels is what I would call that. This is curling up, which is a good sign. That means that we're bullish. If it was coming down and breaking these new lows, that would mean that we are potentially bearish. And on the weekly, we've been hugging that upper price channel, which is a 20 period as well. Another thing I like to use is a sector rotation grid. So I like to look at these. This is just relative strength to the SPX over here. As you can see, energy has been trying to make a move. What the heck is this one? Oh, it's healthcare. Let's move this. Maybe we move that down to there. Yeah, there we go. That's better. Let's see. We got energy up here, maybe gaining some strength potentially. It is positive, which is a good sign. It's not negative. Um, so that's a good thing. Obviously, you can't go negative, but the strength here is really, really weak. Materials, wood did have some strength, but there's a pullback here. Industrials, no strength to the SPX. Consumer discretionary is all over the place. We were gaining strength, and then it absolutely dumped. Consumer staples, nope, definitely not. Communication services, definitely consolidating here. Let's see. This is the utilities here. They'd had quite a bit of strength and they've pulled back. Real estate falling. This is infotech here. Typically always doing pretty good compared to relative to the SPX as they're the ones that hold the most value and the most weight in the SPX and the SP 500. So there is that. But healthcare, man, wow, it just blew up out of nowhere. So that's probably rotation into healthcare since the beginning of the month. So keep an eye on that. Maybe a slight pullback coming as strength has hit recent back into June with strength of the S&P 500. But financials losing strength, industrial, infotech was strong, but we could say it was overextended potentially, and then it pulled back into a normal to reality. So I use that, and then let's see here. Let's see. Oh yeah, another thing I like to use. I just have some indicators that I use for trends. I have an ETF filter down here that I always have open to see what's going on for the day. Let's get that open. We've got ARC here. So I've got a trend thing. Just kind of it's mathematics using simple moving averages and volatility and average true range and slopes of the moving averages. Green just means you're in an uptrend. Reds that you're starting to move bearish. You can see ARC, which is the innovation ETF, has definitely gone into a downtrend. This is just a 3 month chart. Uh, Bitcoin has been in a downtrend for a very long time. High yield bonds, HYG, so the corporate bonds, that is just kind of been consolidating over the past 3 months. So there's been a couple of opportunities to either reverse a trade or go long off out of the range. SMH, maybe just a pullback after breaking out here in the flag. DLT, maybe potentially a head and shoulders pattern. You'd have to look at the volume. Volume was high coming in, pulled back, high coming up, but the volume over here is not higher than over here. But it could potentially, if we broke through here, you could see a pull down, then back up, and then maybe a reversal if it was a true head and shoulders pattern. UUP, you've got that, which is a dollar. Just been flagging out here, so maybe a potential flag here again. So look for a breakout. We had the high volume coming in, then volume has dropped off. UVXY, I do have that open just because that's volatility ETF. Not much, just maybe a higher bottom potentially. XLF financials important, just been consolidating here. XLK technology, got the breakout and then the pullback. Actually looks very similar to SMH, huh? Because they're basically the same. You got XLP here, just downtrends, down, maybe flagged out, down, maybe it's flagging again. But of course, you have to look for lower lows and maybe a potential break of this, a potential trend line right there. Utilities, flagging. So the sector to look at, XLV, also breaking out. So we'd like to see some consolidation there and see if that continues to hold if you're into healthcares. Then XLY also been in the consolidation phase as well. Those are just some things that I look at in the market. I do have volume profiles that I use. So if you went to ES here, I've got some levels plotted out. This is a weekly level. So we've had a lot of trading going on here. If we did come down, maybe we find some volume, some trades in that range right there. And then I just have the volume flow indicator, which was actually negative weekly up until the 18th, but it hasn't made a new high since back here. Interesting, huh? And then this is the daily one. We were making new highs coming into here. This is actually a higher high, lower low, lower high here. So there's potential divergence with the volume flow indicator. But we've got some new levels here. There could be we could duplicate that. Maybe we could draw a new level up there, which is basically where we finished for the day, and maybe we could put one up there too. But I'll hold on to that. And then I have a hourly. So that was a weekly, a daily, and an hourly just to look at. So lots of volume up there, and I just use the nodes if I'm trading levels and looking for spots there because it's based off of volume and price. But yeah, that's just a couple things that I look at throughout the week. For my SPX trading, I just have this on, which is the VIX, the tick, Volt ratio, advanced decline for the market. Then I have ES here on a 2-minute chart with a VWAP, and then I have my trend indicator there as well, along with stochastic reversal indicator as well. That's what I got. Looking forward to next week. Next week will be interesting because we have actual data coming out in the market, um, potentially on the 20th and the 19th and the 20th since the government's back open. So markets could get wild depending on how that data comes in. But I hope you have a good weekend. Um, yeah, hope you have a good one. Hope you learned something to be able to look out in the market for.